Before we get started, I want to remind everyone that the information in this presentation is not to be or construed as investment advice. The information presented are subject to change without notice, and while we have made every reasonable effort to ensure that the content is reliable and accurate, we have not independently verified the content and are not responsible for errors therein. Please consult a professional advisor before putting a Loonie in any of these financial markets.
Hi everyone, my name is Richard Diaz and welcome back to the IceCap Canadian Market Wrap. In this week's episode, we're going to thankfully put a bow on Canada's 45th election. This will hopefully be the last time we dig into politics for a while, but before we move on, we're going to take some time to discuss some of the potential risks that might arise from a change in Canada's leadership. First, a post-mortem. The 45th Canadian election held on April 28th resulted in the Liberal Party led by Mark Carney forming a minority government. This marks the Liberals' fourth consecutive term in power and their third straight minority government. The Liberal Party won 169 seats, falling short of the 172 needed for a majority, while securing the largest share of the popular vote with over 40% for the first time since 2000. The Conservative Party, led by Pierre Poilievre, increased their seat count to 144 and also surpassed 40% of the popular vote, a generational high for the party. The Bloc Québécois suffered losses, dropping to 22 seats, and support for the NDP collapsed, risking its party status with its worst results since the party's founding in 1961. Much of the discourse throughout the election campaign centered on issues such as the cost of living, housing, crime, and the carbon tax. But at the end of the day, it seemed like the boogeyman that includes threats from Donald Trump were what carried the day for the Liberal Party. Baby boomers that consistently have the highest voter turnout felt that the single most important factor when deciding what party to vote for was dealing with the belligerent American president. Let's be clear. We think that this is a red herring, a canard, and a distraction from the real issues that plague Canada, like housing affordability, and the decline in the standard of living of working Canadians. But this barely registered for baby boomers. Carney, a former central banker and first-time politician, campaigned as a calm, steady hand and an experienced economist who knows how to navigate a crisis, and the electorate believed him. Our view is that this so-called crisis and threat from America will dissipate almost as fast as it appeared. Indeed, just yesterday, President Trump shared that the two liked each other and alluded to an imminent deal. Nevertheless, the people have spoken, and Mark Carney will take his throne when Canada forms its next parliament. And to that I say, be careful what you wish for. Canada's PM job is looking a lot like a poisoned chalice, something that seems very good when it's first received, but in fact does great harm to the person who received it. With the dust still settling on the results of the federal election, the clock has already begun ticking on Mark Carney's promises to unite the country and rebuild the Canadian economy. We've talked a lot about the structural problems Canada faces, like housing affordability, a productivity emergency, capital flight, high debt levels, and ballooning deficits. Mark Carney and the cabinet that helped usher in many of these problems will have a lot on their plate. The first and perhaps most pressing issue is that Canada is mired in a per capita recession that is entering its 11th quarter. It is unclear that any government can truly arrest a business cycle, but they surely will try. And we can expect large deficits, as laid out in the Carney platform, to give domestic demand a boost. Although, as we've discussed over the past two episodes, it may fail to address the underlying issue of private capex and negative productivity growth. Let's hope we're wrong. Additionally, deficit spending is not without its own risks, as debt service charges linked to higher bond yields continue to rise, gobbling up a greater share of the already high tax take. The other issue that has bubbled to the surface is that of Alberta independence. Less than 24 hours after the Liberal Party's victory, Alberta's premier announced Bill 54. Ostensibly, the bill aims to enhance election integrity, transparency, and trust in Alberta's democratic system. It also makes referendums easier by lowering thresholds for such a plebiscite. For the uninitiated, it's important to note that this sentiment is not at all new. This famous cartoon was first published in 1915. It's a brilliant image of the way many Westerners feel. The modern idea for a separate Alberta began in the 1970s as a response to Prime Minister Pierre Elliott Trudeau's pursuit of bilingualism and multiculturalism in Canada and the National Energy Program. These programs were seen by many Albertans as an attack on oil resources and the promotion of liberal anti-Albertan values. The more things change, the more they stay the same. I'll try to avoid stepping too deeply into this political quagmire. That's not our job. But at the risk of suffering the viewer's ire, I will suggest that the West, and in particular Alberta, has a point. The West of Canada has been chronically underrepresented. Of that, there can be no doubt. They have fewer federal seats per capita and far fewer Senate seats. And when one takes into consideration the enormous fiscal contributions to the rest of Canada, we are reminded of the political slogan that originated from the American Revolution: no taxation without representation. The questions that many Canadians should ask themselves is, 1, is this fair? And 2, how sustainable is this? As investors, we're focused on the risk this poses to Canadian solvency and to the loonie should tensions rise between Alberta and Ottawa. The reason they might escalate is the continued attacks on Canada's golden goose, the oil industry principally located in Alberta. For 10 years now, the Liberal Party has systematically attacked and derided the Canadian oil and gas industry, and Albertans rightly fear that Carney's minority government will do more of the same. From a political perspective, we get it. Many Eastern Canadians seem dead set against the Canadian fossil fuel industry, and they largely voted for the Liberals, the NDP, and the Bloc. From an economic perspective, we think this is absolutely insane. Canada is a petro-state. And one look at the Canadian current account balance tells you that the rest of Canada would be totally screwed without the massive oil exports from Alberta. Without the massive, sustained, positive contribution from energy exports, Canada's current account balance would be deeply negative. And because of our high debts, poor productivity growth, and capital outflows, a rebalancing would require a very painful readjustment, i.e., lower consumption or a much weaker currency. And this pain is always felt most acutely by the working class. The hope for Canada is that Mark Carney knows this and can park his long-held anti-oil views for the sake of economic pragmatism and Canadian unity. In the meantime, it's our view that the trends will continue, and this is for weaker economic growth and for a vulnerable currency. So that's a wrap on this week's episode. Thanks again for listening. Please like, subscribe, and follow for more. And as always, we manage money for families all across Canada and the rest of the world, so please feel free to get in touch.